Hello, traders. It's 8:01 a.m. Chicago time, 9:01 Eastern on Thursday, the 22nd of August, 2019. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. You probably get tired of hearing that every morning, but there it is because it's required. This is episode number 1580. We are looking at a market that has some interesting movement overnight, but overall risk on again. Yesterday was a risk on day. We did manage to accomplish what was expected. The FOMC minutes were a bit of a dud there, small movement. The minutes showed what the market expected. Gold is off again, trading at 1508, $1,508, down almost $8 or 0.5%. The Bund is a laggard as well, down 83 ticks or 0.46% from settlement. The bonds are down 21 and the 10 years are down 8.5 ticks. The leader this morning again is crude. Crude is up 58 cents or 1%, trading at 56.26 on the October contract, followed by the cable and the DAX. The DAX is up 44 points. In the U.S. Indices, the Russell's the laggard with printing at 1.4 points higher than yesterday's settlement, or 0.09%, followed by the Nasdaq, then the S&P, then the Dow. The Dow is up 60 or 0.23% from settlement. So overall looks risk on, but really not very aggressive in the overnight session. That's how things are looking this morning. The FOMC minutes, in case you didn't get those, it shows broad agreement about the last meeting, and that is not to tip their hands about what happens next. The meeting showed a fractious meeting on many fronts last month and a divided Fed cut interest rates for the first time in a decade. So the comments from various members of the FOMC of that committee, some felt that 50 basis point cut was warranted. Some felt that the cut is not warranted yet, and so on. So there's a lot of discord there. The S&Ps traded down and up about 9 points, and then just continued their auction sideways, going back to the scene of the crime, and it's like it never happened. So that's where we are. Overall, nothing really to report today. Focus is again going to the Fed again. We have a Fed Chairman, Jeremy Powell, at Jackson Hole, the Jackson Hole Summit on Friday. So the market's going to be paying particular attention to that. I suspect that today is likely to be a holding pattern, kind of circling around the airport kind of day. Again, like yesterday and Tuesday, I guess. So that's where we are. Let's take a look at what we expected yesterday versus what we got, and what happened to that. Oh man, that's interesting. Just give me a second. Somehow the screen showing the expectations for yesterday was closed, although I don't remember closing it. Let me bring that up. The primary expectation was in line. I did expect some volatility after on the FOMC, and we didn't actually get that. Again, we had a little sputter, and the market just resumed its auction. Here's what was expected yesterday. There we go. So here's the review segment. Yesterday, the expectation is we're likely to take out the overnight high immediately on the open, and then expecting a pullback down into 29.18, 18 quarter being the overnight point of control. So follow the green, take out the overnight high, which is this little line right here, and pull back to 29.18. Okay, and then come back up and then just hold sideways until the FOMC, and then the FOMC is expected to help us have a move. Some odd artifacts from yesterday. Now, here we go. Here's yesterday. Took out the overnight high immediately. Pulled back, didn't quite pull back to the 18 as expected, but it did so later. It did so later in the session, right down to 18 exactly, and then pushed back up. And as you know, like I said, I was expecting it to push higher into 40, 45. And what it ended up doing, which was really, really unusual, is after extending the range down. So we have a range extension down here. We took the IB low out. We took the IB low out here and here. We ended up taking out the IB high and closing at the high print of the day just 3 seconds before the pit closed. So this qualifies as a neutral extreme up day with a close right at the high, and overall quite a bullish close into the overnight session. So the expectation in the overnight session, based on the way this closed, is it's likely to take out this 32 and a quarter area and continue higher. What was really interesting is not only how it closed, but also it did manage to go up and push through that 32.25 high, but it pushed all the way up and then it came all the way down to 18 and a half, and now we're trading right in here. There were a couple of news events overnight. There was commentary from let me see, I looked this up already. There was commentary from the China Commerce Secretary, that despite delayed tariffs from U.S., any new tariffs to lead to trade escalation, urges U.S. to stop imposing tariffs, and then a whole bunch of stuff. That was at 2 a.m. Central, and we see the market kind of roll over. We see the market then respond to the German preliminary manufacturing PMI, which came in at 43.6 versus 43, the eighth month of contraction, and the Eurozone preliminary manufacturing PMI, which came in at 47 versus 46.2, seventh straight month of contraction, but highest reading since June 2019. The market pops, and then just trades sideways from there. So here's what the overnight session looks like. So we do complete the neutral extreme up push, and then from there we just drift down on this in this channel, and then we break higher on that the European releases, and then we come right back and resume the downtrend to put in a low at 1850. Remember, yesterday's low is 18. And the market's been doing this overnight. It's been testing getting closer, testing the day session high and low. And what we have overnight is a double distribution profile, with the market trading in the upper distribution, the point of control in the upper distribution, and volume is quite high, 304,000 contracts for the session. But the profile shows that there's no consensus on price. There's a lot of price discovery overnight. And yesterday's values being rejected for higher prices this morning. That's what we're seeing this morning. So the question becomes, now that we know this, the question becomes, do we continue, do we challenge and continue pushing higher prices, and therefore move away from value, which is what we call initiative behavior, and therefore start working towards 45. Here's what we're seeing for today. Do we head up into, my bias is leaning long based on this formation, this push, pull, push, and consolidate. I'm expecting this to resolve higher. The auction is unable to walk away or find an excess in the 32 to 34 area, and is pushing through some big stock zones in this area. The expectation is it's likely to challenge that 45 and start squeezing them shorts. Squeeze them shorts, baby. It just does that so often. So in my eyes, I'm seeing 29.49 and 29.50 as the next key targets. So coming into this morning, we're opening in an open auction, expecting an open auction out of range. The overnight inventory is somewhat balanced, although we're higher now. I'm expecting a reversion, a small reversion back into the 29.30 area, but I'm expecting this to find buyers and to start to squeeze into that last high at 44.75 to spike through to 45 even by the end of the day. That's scenario one. I'm looking for a small pullback. I'm looking to jump on that pullback. And if it starts to clear the high made at the open, then it's time to hang on. And the scenarios in play, we aim for 44 and a quarter, 45 even from here. Okay. Secondary scenario is it opens, it pushes the high, attempts to take out this 40 area, impulses down, and then falls back into the range and comes back into line with the 29, 24, 50 MC, yesterday's point of control, and then tests the value area and then just hangs in there ahead of the Jackson Hole comments from Powell as the market rebalances. I'm expecting the behavior to be initiative today, though. So we'll see where this goes. But overall, it's very clear to me that anything below this 15 area will take us right down to 08, right down to 01, and then right back down to 95. So that's the third scenario. The third scenario is market just doesn't have the buyers, right? So we open, we pop higher, we have an open test drive down, consolidate at VPOC, consolidate in the 15 area, and then start walking down into 08, 04, 01, and then make our way down into this to close the gap at 94, which is actually up here. That would be scenario three. This is a selling scenario. And if this happens, then we are likely to start moving towards 29.40 or 28.40 below. So that's the selling scenario. And it could happen. And that's not too much range if that happens. There's a lot of, if I put a profile, a composite profile around this area that we've been trading in, there's a fair amount of action in here. It's about 3 million contracts, 2.89 million contracts, and a lot of those people are likely to be wrong. And so I'm looking for once it starts to sell off, I'm looking for scenario three to be quite aggressive. Okay, so that's how things are shaking out or may shake out in the future. But overall, I'm expecting it to be a kind of a muted day with an upward bias. That's how the auction is likely to play out today. Again, as always, I'm going to remind you that you're a gambler unless you're someone who is evaluating and sizing up risk before you put the trade on. If you don't do that as a matter of business, of running your business, you're just gambling, and eventually the market will catch up with you. It's like the tax man, you can escape your taxes for as long as you want, but eventually they catch up with you, and it'll cost you. So make sure you're aware of where you could be wrong. Make sure you're aware of why you're putting the trade on, and define that risk before you put the trade on. Your goal is to survive every single trade and to be here tomorrow, because tomorrow is the next opportunity and the next opportunity and the next opportunity, and that's how we make money. Good luck today. And here's the order flow. Almost forgot to cover that. Pretty good order flow in that 40 area, the first target. We see a fair amount of offers that have been sitting here. And then, of course, the 45 areas preloaded. So those are really interesting areas to interact in today. I'm expecting that there's likely to be some liquidity after the open in that 29, 24, 50 area, and it's likely to stick around. But right now, the stronger, the longer term liquidities from the offers. with 2940 being the key area right now. Good luck, and I'll catch you tomorrow morning. Take care.